Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello and welcome to another episode of our InvesTips podcast. Retirement planning is an important life goal, one that helps you achieve a comfortable lifestyle and financial security after your working years. But have you ever looked at insurance as a key ingredient of your retirement strategy? Today, we'll look at how insurance can play an important role in your retirement planning, offering protection, steady income, and opportunities to grow your wealth. Joining me today is my colleague Gautam Duggal, who is Global Head of Bancassurance at Standard Chartered Bank. He has over 26 years of leadership experience in insurance, banking, and finance. Welcome, Gautam.
Thank you, Steve. It's indeed my pleasure to join this discussion. Indeed, as you rightly said, insurance can offer the real value in one's retirement planning, provided we can focus on the right solutions. And the discussion is quite timely because we're already seeing a lot of changes happening in the retirement and the insurance space, and even more as expected in the future.
Okay, so let's get into it. So, planning for retirement can be tricky. We need to estimate our future costs and put together a plan that not only lets us enjoy our life after retirement, but also helps us pass on a legacy. So, at its core, retirement planning is really about striking the right balance between protection and wealth maximization. And obviously, insurance sits right at the heart of this equation. So, maybe, Gautam, you can share your thoughts on how the synergy between retirement planning and insurance can help investors prepare better.
So Steve, typically when it comes to securing a retirement, and to be honest, I really don't like the word retirement. It kind of makes me sound quite old myself, in which you are not and I am not. So let's say it's life 2.0. To make it things lighter, but the top things that one would consider are the financial security, the market volatility, longevity, and most what all of us are seeing are the rising medical expenses, and that's why insurance kind of steeps in very, I would say, seamlessly. If we can choose the right product and we can see what exactly is going to be our needs going forward, we can build a nice, I would say, a nest portfolio that gives both security and growth going forward when we are looking into the, I would say, better phase of our life. In fact, insurance can also help close the retirement and protection gaps because it offers a lot of benefits which a lot of people kind of over tend to overlook or might not be aware about it. Such as you can sustain your lifetime income through insurance solution like annuities. Having a comprehensive health cover ensures that any major medical expenses don't eat up into your savings pot of money. You can also kind of be able to balance out the inflation and the market risk protection, and most importantly, be able to kind of adapt to the changing market condition, which is very, very critical because that's a space which is quite unknown to us and we need to be a little agile and flexible. So having a right product is not only just peace of mind, but just gives us the confidence of living the life much more better.
Okay, that's a great summary. I guess, in essence, insurance doesn't just protect our future, but it can also empower us to live better in retirement or in life 2.0, as you put it. I guess what really stood out to me was the point about choosing the right plan. There's obviously so many insurance solutions out there, each decide to address a specific risk or need. One of the biggest risks that we face today is longevity, of course. Over the past 50 years, life expectancy has gone up by around 2.5 years every decade. That's naturally adding pressure on retirement savings, increasing liabilities by 3 to 4% for every extra year. So obviously planning becomes really, really important. So from your perspective, what types of insurance solutions can help manage this longevity risk?
So, Steve, if I can break up it in two parts. One is in terms of how do I ensure that I have a regular income. So let's be honest that we are all quite tuned to a certain lifestyle today because we have a regular income. Either we kind of have our own businesses, or we are employed with an organization, and so on and so forth. So we kind of not knowingly but unknowingly are tuned and used to a certain lifestyle. So once we kind of come to that phase of life and we have just kind of taken life a bit more, I would say, slowly and have our own ways of working, but our lifestyle might not necessarily undergo the same change. So, how do we ensure that I have a regular income even during those years when I'm not actively working? And for this, annuities are quite, I would say, ideal for that period of life. It is about you can make a contribution today. When you have that extra pot of money, and even if you don't, you need to kind of start being responsible and start saving some pot of money aside for this kind of a need of going forward. And depending upon the type of plan, you can plan your payouts, which basically means that once you decide that at the age of 60 I need to be paid every month an X amount, and the balance can be paid at the time of 80 or 90 years, you can pick up a tenure. So what it does is that it helps you to manage your income stream even when you're not actively working, and helps you to continue to maintain your lifestyle. So that's one of the, I would say, avenues of kind of, or a product, sorry, which is quite ideal for this kind of a phase of a life.
Okay, so that's a good start in terms of looking at longevity risk. Maybe let's move on to another big concern, which is obviously healthcare costs. Which obviously, we know that healthcare costs are going up faster than normal costs, if you like. So global medical inflation averaging around 10%. So getting more expensive every year, and the rule of 72 means that's doubling every 7 years or so. No, that means that we really need to plan ahead. So, what kind of insurance plans can help manage rising healthcare costs and long-term care requirements?
Steve, a health product is absolutely non-negotiable. You might not have a good investment portfolio, but you do need to have a health cover. And it's as you rightly said, some of the figures that you quoted might look at very small figures like a 7 or 10%, but when you look over a period of 20 years, you're basically doubling the cost that you might be incurring on an unexpected medical expense. And that's the reason why you need to start having this kind of a product early in your life, so as the continuity continues. So health insurance is absolutely non-negotiable, because what it does is that it helps you to kind of have a financial protection from not just the medical care, but also that unexpected medical incidents which might happen in our life. And these covers for the big expenses like hospital stay, any emergency, god forsaken, surgery, and so on and so forth. So it kind of helps you to not dig into your saving pot, but helps you to manage and tide over any difficult period that you might kind of face to. The other, definitely, I would say, is a critical insurance product, which definitely should have it. A lot of people confuse a critical illness cover with a medical health cover. And just maybe I take a minute. A critical illness cover is basically you take this cover for some serious, I would say, medical conditions such as cancer, heart attack, or major organ failure. And what it does is that it gives you a lump sum payout, which you can use to kind of take care and manage the treatment over a period of time, rather than again digging into your medical care policy or even your savings pot of money. So these two products are absolutely critical, and they provide you with a very nice safety net, so that you're not just you manage your health properly, but in case of any unexpectedness, you can kind of financially be taken care of.
So I must admit, the critical illness insurance is something that strikes close to my heart,
Yeah.
because my father thankfully had critical illness insurance, which I think my mother is now living off the benefits that provided. So I think it's a really important and underappreciated area. It's not necessarily that cheap sometimes, but
No,
it's very,
absolutely.
very important. Let's talk a little bit about inflation. So obviously, you can't risk. Inflation is
Yeah.
a constant. We talked about it within the medical sphere, but other specific insurance plans that can help cushion the impact of inflation and support a more stable retirement in a more broader context.
So I did talk about annuities. So we also have a type of product which is known as the inflation indexed annuities. So basically, what it does is that the retirement income gets adjusted based on inflation. So as the prices go up, the payout also increases. So you're kind of almost, if not more, but at least balancing out the rising cost. The other kind of products are definitely the index universal life. Basically, it's a lifelong coverage, has an investment component that can be used during your lifetime, and also the investment part of the product kind of can provide the inflation. I would say the challenges one might face over a period of time. The other is definitely your investment link insurance policies, right? But But I think what's important, Steve, is that while we're looking at to kind of have a product which either balances out the inflation or kind of beats inflation, what's important for us to understand is to kind of spread your insurance products also, not just put everything into one product line, and kind of spread your investment as you rightly say, and plan in such a manner that you start keeping a pot of money aside early in your life, and not when you're in the age of 50 or 60, because that's when people start thinking about it. But for me, I would say is that your life 2.0 starts as soon as your life 1.1 is also start off. Your life 1.0 is about buying a house. Life 2.0 is ensuring that you enjoy living in the house.
Okay, thank you so much. So that's walked us through a wide range of insurance solutions, and how we can address different risks. Maybe let's just have a quick discussion about any trends that our listeners should watch out for, and how these trends might impact the insurance and retirement space in the future.
I guess the biggest trend is going to be on account of the health and the ecosystem that the insurance companies are building on the health proposition, because the health proposition will not just be a product, but will also have an ecosystem which helps us to, live have a life where we can be much more healthier. And that's where the insurance companies are really working upon, in terms of, I would say, building an ecosystem of services that can be provided along with the product. The other is the insurance companies are also trying to bring out solutions which are individual to a customer, and not a solution which kind of pleases everybody else. Which means that if you have a specific requirement, the insurance companies in the future would be able to address them, and not kind of deny an insurance cover to you. And lastly, but not the least, is it's definitely, insurance is a lot much more of an emotional, I would say, a proposition, which mean that this is not just a product which is being looked from material point of view, but something which you have to really look from a future, and which comes into play when you least expect it. The way I look at it is that people talk about AI a lot, but people don't talk much about the insurance and the way it can play a critical part going forward. So I would say the health piece is going to be critical, and the whole individualization of the products are going to be critical.
Okay, well, Gautam, thank you so much for your insights today. I think people have learnt a lot from this. I think I think that last point you make is we're often very interested. We always like good narratives and stories as to how to make a lot of money, but actually downside protection and making sure you've got key insurance needs covered is absolutely critical. And without that, then the investments don't really matter that much. So. A well-rounded retirement plan, of course, should include insurance, as it covers risks such as longevity, inflation, and healthcare cost increases. With that, we've come to the end of today's episode. If you'd like to explore how insurance can be integrated into your retirement planning strategy, please visit the link in the podcast description. And I look forward to speaking to you again soon. Until there, please take care of yourself and make sure you're insured.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.